Committee to order at 6:31 p.m. This is a regular meeting for the month of August, and the agenda was posted in advance of the meeting as required. I would like to introduce myself, Darlene Mann, and the members of the committee were present this evening, which include Cindy Van Conen, Dave Flynn, Brian Rader, Raul Blanchet, Matt McGuire, Tom Whalen. Also, I'll like to mention Tony Stinizzi has an excused absence for this evening. And I'd like to thank and introduce Kelly Seeley, our business administrator, and Tim Green, our auditor for the district, who are present for this evening's meeting. If you could join me in the Pledge of Allegiance. If the flag is up, it will not be. Just it's always over there. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Ask if there are any agenda adjustments this evening. Have kind of a brief agenda, kind of getting back in the swing of things after having the summer off, so I hope everybody had a great summer. As we typically do, we did take off the month of July, so the last time we met was toward the end of June after the school year had ended. So for tonight's meeting, we have Dave as the process observer, and we can move on to the approval of minutes from the June meeting. I did include those with the agenda materials because it's been a while since we got together. This way everyone could review them. I know that Raul sent some recommendations of some changes. So at this point, I'll take a motion to approve the revised minutes of the June meeting.
I'll make a motion to approve the amended meeting minutes.
Okay, from Raul, seconded by Tom. It's fine. If there are any other comments, questions, changes? Seeing none, all those in favor of the amended minutes from the June meeting? 1, 2, wait a minute. 1, 2, 3, 4. Opposed? Abstentions? 1, 2, 3. Okay, so that was Dave, Cindy, and Matt abstaining. Okay, great. We can skip right over public input for this evening. And I will mention, I was hoping to be able to put together a legislative update, and I just didn't have an opportunity to do that. It was taking me a little bit of digging to get to some of the things that were passed. But there was an RSA passed that does mandate public input at school board meetings, which our school board is always excellent at including and addressing issues and concerns, and I think in many cases go beyond the time established in their agendas, but there's an RSA that passed that now requires 30 minutes of public input at school board meetings. So I'll gather that information hopefully for the September meeting.
So does that mean that if there are no inputs, you have to wait 30 minutes of downtime until that
I don't know what that
proceed?
means. All I can tell you is what the RSA says. And we'll leave it to legal counsel to direct the board how to proceed if no one is present to give public input during that 30 minutes of time.
Before 30 minutes. You allow up to 30 minutes, and then you can say that's it, we're done.
Okay,
If you don't have to, up to 30 minutes.
all right.
I believe as long as you would be
So that's not required for budget committees. We will, of course, include public input and would welcome anyone who would want to come give it. We just don't really typically receive any until we get to the public hearing phase of the budget process. Having said that, we can move on to the general business portion of the meeting. And we'll welcome Tim Green this evening. I'm not sure how many years you've been coming to our meeting, Tim, so thank you. Welcome. And remind everybody that Tim's here to discuss the audit, which I did share with everybody in the spring. And again, when these materials went out, it is for the fiscal year ending June 2021. So not for the year that we just completed. That audit was completed this summer. And I'm sure there will be a similar report coming out, but having probably just completed that audit within the last week or so, all of those materials and everything are in development. So this is for the 2021 fiscal year, just to kind of ground everybody with the time period that we're talking about. So Tim, I'll turn everything over to you. Just ask if you would like questions as we go, if you prefer to wait.
Yeah, questions as we go is fine.
Okay.
I can be long or short-winded depending on the crowd, so.
Well, it's quite a leap to go from not meeting to June to going right into an audit, so, but here we are, so.
This will wake you right up. This is, as you said, I think it's good to point out, this is from July 1st of 2020 to June 30th of 2021, so just think about, that was the full year of dealing with COVID and how that affected the school versus, 3 months of activity. Also, mainly because of COVID, your opinion letter that you have, the first 2 pages, I always say that's really what you're paying my audit firm to produce, is our opinion on whether or not your financial statements are fairly presented in accordance with generally accepted accounting principles. Because of the amount of federal funds that the cooperative district received, they actually were required to have a single audit this year, which we haven't had to do since, I think during my time, I happened to be one of your auditors over your previous audit firm at a certain period, and I think back then they had a single audit, but it had been a long time since the district had to do a single audit, mostly because your federal grants just consist of, your main federal grants in any typical year are special education and food service. This year you had multiple COVID grants, and that was added to your line. So you're over $750,000 as a threshold that every single school district and town in the country has to follow, regardless of size. You were at just under 1,914,000. There's Exhibit 20 is a breakdown of all your federal programs specifically. So there's a couple extra paragraphs or even just expanded paragraphs just indicating that we audited under the normal standards we audit, which is the generally accepted auditing standards, and then we also audited under governmental accounting standards and the uniform guidance, which is the single audit standard. And so we give you 3 opinions, so there's actually the main opinion letter in the front, and then there, if you were to flip through, you would have seen 2 additional opinion letters as well. And they all said the same thing, fairly presented, no qualifications, no adverse opinions. So again, it's a positive result as has been. Beyond the opinion, manager's discussion analysis letter, I always just point out it's done by Kelly and her staff. Nothing, I checked the figures to make sure that they're agreeing with your actual audited financial statements, but beyond that, I just make sure that it's not putting too much that's subjective. It is supposed to be a quantitative kind of recap of the year. So for the year ended June 30th, 2021, on Exhibit 1 on page 14, I'll start there. You can see that the district's total net position was $1,860,000. Of that, you can see 2 large figures. Your bulk of your net position is related to capital assets, net of the related debt. So you have about $15,800,000 tied up in your capital assets, net of the debt, and then you have restricted net position. Those are expendable and non-expendable endowments. You have a small amount restricted for other purposes, that typically is a federal grant, unspent, or other types of restricted programs. And then you have an unrestricted deficit of $14,500,000. The reason for that, as I explain every year, your net pension liability with the New Hampshire retirement system and the related other post-employment benefit liability, those balances, which are about $24 million, do not have any sort of related asset, whereas capital assets have a related debt. Or put it the other way, debt has a capital asset typically related to that. Hence, you have a positive net position for your capital asset. With those long-term liabilities, there is no asset to offset that, so you kind of will always carry that deficit, if you will. So Exhibit 2 on the next page shows that the total net position for the district actually decreased by about $300,000. We can see also on Exhibit 2 your general functions for the governmental activities, and then related program revenues for those activities, and then your general revenues, which is again the bulk of the revenue to any school district in New Hampshire is general revenue, because taxes assessed for the school district are not targeted to any one specific program. So it's considered a general revenue, and the same with the state adding the state grants and some some other general grants that the schools get. So you can see the bulk of your revenue, 22 million of your revenue is just a general revenue source. Moving on to Exhibit 3, this is your governmental funds. This is a modified accrual, so you don't see your capital assets, you don't see your long-term liabilities on here. These are just current activities. General fund has total assets of 3.5 million, just over 3.5. Total liabilities about 250,000, and a total fund balance of about 3.3 million. Of that, you have 4 of the 5 potential categories of fund balance. You have non-spendable, about 50,000. That's your prepaid items. So as soon as the year rolls over, that money is no longer available. You have committed balance of about 568,000. Those are any warrant articles passed in March during fiscal year 21. So the fiscal year 22 budget cycle, but those articles that say we're going to use fund balance, they immediately are tied up. They immediately come out of your unassigned fund balance and become committed. As well, on this statement, your trust funds are combined. Your expendable trust funds are also reported within the general fund. They're always segregated fund balance. They never roll into unassigned fund balance. They're always considered committed. Then you have assigned fund balance, which is generally your purchase orders that you're rolling forward. And you're left with your unassigned fund balance of just over 2 million for the year. You also have major funds for the grants and permanent fund, or were considered major funds for fiscal year 21. It tends to be the same funds. It is a quantitative factor, so every year the district looks at the total assets, total liabilities, total revenues, total expenditures by fund and says, does this represent 10% of the grand total? If so, any one of those categories is more than 10%, it becomes a major fund. Like I said, it's typically the same funds every year. But you may see a year or two here or there where the food service might jump up or grants might drop depending on the types of programs you have. And there's a total column for your other governmental funds, so these are all non-major funds. And as you've seen in the back, there is a combining schedule that does break down that further. Exhibit 4, it's a crosswalk between the governmental funds that we just went through, the general fund and so on, to your governmental activities, which is those first 2 exhibits. So you can see that the difference being your net capital assets, about just under $20 million, your long-term liabilities, which are just over $28 million, and then deferrals related to the pensions and OPEB liabilities, which is a net asset actually of $6.5 million. Exhibit 5, again, this is back to the governmental fund basis. So this is just your statement of revenues, expenditures, and changes in fund balance. So you can see at the very bottom of the general fund, you can see that it had the total fund balance for the general fund increased by just over $1 million from the year before.
Real quick, going back to Exhibit 4, what is OPEB liability?
So that stands for other post-employment benefits. So that is basically your 2 parts of your health insurance. So it's the Medicare subsidy that was in the New Hampshire retirement system through 2013, I believe, is when they cut off the entrance. But that figure is still being calculated for anyone in the system.
Okay.
Any employees or people in the system. And then it's also an implicit rate, which represents the fact that employees in the health insurance pool can remain in that pool even when they retire, even at their own cost. Their rates are going to be a pool rate, which
Okay.
is going to be a benefit that an employee is earning while they work.
Okay, great. Thank you.
Yep. On Exhibit 5, again, a couple of things. The grants and permanent fund, you can see grants are always matching, so revenue always equals expenditures in the grants fund unless you may some years have a deferral, meaning the district hasn't received money from the state for those grants in a timely fashion to report revenues, but otherwise, typically you're matching your expenditures with your revenues. And then your permanent fund, you can see that the permanent fund increased it by about $60,000 in fiscal year 21. And then you're combining other governmental funds, they had a decrease in total of about $100,000 from the year before. Exhibit 6, again, a crosswalk between the 2 accounting bases. This one shows you how your net change of your governmental funds of just under $1 million went to an actual decrease in your net position of that just over $300,000 figure. And you can see it's because you had capitalized capital outlay greater than your depreciation by about 200,000. You had payments on your debt, which has actually increased in your net position. You had changes in your other long-term liabilities, such as termination benefits payable, compensated absences, OPEB, and pension. The big effect really on your change in net position was the calculation of the pension liability. There was a roughly $2 million change to your activity, to your operating activity, if you will.
What does that represent? Do we know?
Every 2 years, so the state gets an actuarial evaluation every 2 years, and then the actuary updates it that off year, and they basically are running their figures to say, based on contributions, based on a discount rate that they assess every 2 years, based on all those actuarial
So it's just an
factors.
adjustment to the actuarial
It
basis?
basically is, yeah.
It's not an actual fund difference, it's really just an adjustment of what the expected outlays. will
Yeah.
be. Okay.
Yeah, they're recalculating the liability every year by community that's involved in the
Depending
system.
on what they predict the retirement rates and death.
Yeah,
rates.
exactly, it's their net liability, so how their investments did and so on.
But there's no major change in our position physically, it was just a
Right.
calculation.
Yeah, and that's what they will factor their rates, the contribution rates every 2 years, it's 2 years
Thank you.
cycle. Exhibit 7, this is a budgetary basis schedule for the general fund. So this is where you can see your budget, including any carry forwards from the year before, your actual, which represents expenditures plus any carry forwards to fiscal year 22. So you can see total revenues in the general fund on the budgetary basis was just over 23 million. Total expenditures was just over 22 million. So you had an excess of revenues over expenditures of 800,000. And then there was net transfers out, of about 260,000. So the total net change of the fund balance was 545,000. There was also a decrease in committed fund balance. So when a committed fund balance goes down, your unassigned fund balance goes up. So those figures combined, you can see that your unassigned fund balance at the beginning of the year was 1.4 million, and at the end of the year it was just under 2.1 million. There's also a budgetary schedule for the grants fund. The budget on the MS forms for the grants tends to just be a static figure, because you don't really know what kind of grant activity you're going to have, and it's a balanced budget for grants, so there is no tax effect on that anyways. So yeah, so it looks like you're grossly under budgeted the grants, but it's you could change that figure based on historical trends, but it's going to change your bottom line budget. I know that adds other issues there. So, but it does factor into your overall compliance with RSA as far as budget. So that is something to think about. If you're, in 10 years, your grant revenues are 1.2 million, and you're still put $200,000 on your appropriations, you're going to put yourself in a little bit more of a hole. Could.
Right, I mean, in this case, these are related to mainly all the ESSER grants and the SPSRF
Yeah.
and that there was no way we could have anticipated.
Correct.
it.
Yep,
And
absolutely.
so- Well, I mean, we can't anticipate them ending.
And I mean,
you
and
know,
then
eventually, but-
the caveat being too, a lot of that probably would be considered unanticipated, and you can again expend that on top of the budget. So
Right.
there are other methods of addressing that too. So the notes to the financial statements, I don't believe I typically talk too much about them because they're intended to be self-explanatory. But if anyone had any questions on what they saw in there, I'll happily address it. And then I just jump ahead to those following along to page 46 and 47. Like I said, this is a detailed combining statement that for your non-major funds. You can see the other funds the district has. They have a student activities fund, they have a food service fund, a miscellaneous grants fund, or a miscellaneous fund, and then a capital projects fund. That one is clearly winding down. You expended 70,000 that started the year about 100,000 is basically down to 30,000. I believe that was the energy efficiency project, or am I thinking of
I
Hollis?
think that was the turf field.
No. Yes, correct, yeah. turf fields. Exhibit 15 and 16, this is a more detailed budgetary basis schedule for the general fund, so you can see the revenues. Exhibit 15 is your revenues by source. You can see the estimated revenues before your use of fund balance was about 22.7 million, and actual revenues was just over 23, so you had a positive surplus in revenue of about 340,000. And then your expenditures on Exhibit 16, again, you can see that the appropriations and the encumbrances from the prior year versus the expenditures and the encumbrances to the subsequent year, and you were left with a positive, an unspent balance of your appropriations of 1.7 million. Looking down through the functions, no one function was really jumped out other than special programs. That was your biggest positive variance, which was a factor into the 1.7 overall unspent appropriations. I know that seeing, placements and so on during the COVID has been very in flux, if you will, and as you are well aware. And I think that was a big, a big factor, and I've seen that again in fiscal year 22. So, Exhibit 17. This is a good exhibit that really breaks down the schedule of the changes in your unassigned fund balance. So again, you started the year at 1.4 million, voted to use 1 million to reduce or return 1.1 million, if you will, to this for taxes, and then also appropriated 392,000. The revenue surplus, as we discussed, 340,000, and unexpended balance of appropriations of another 1.7. So you had a budget surplus of just over 2 million, plus the decrease in committed fund balance of 127,000. So that's how you ended up at just over 2 million in unassigned fund balance. The district has always included the summary of their student activities funds, so you can see the programs and the balances. Obviously, activity was probably not really comparable to prior years, as programs came back somewhat, I'm sure, but were not fully involved as they were in past years. So the new activity in the audit in the financial statements that you haven't seen before, Exhibit 20. This is your schedule of expenditures of your federal awards. You can see there were various federal awards. The three largest were the Child Nutrition Cluster, your food service, which is your food service program, of course, your COVID funds, which they were all under the same program, but there was a couple different grants. But the total was just over 300,000, and then you had your special ed programs, which was 265,000, and then you had your Title II, Title IV, and then the ESSER 1, which was just kind of being rolled out during fiscal year 21. In fiscal year 22, there was a single audit again, and it was more the ESSER and food service program, as their federal rates for reimbursement were really high for the food service program, so a lot of money came in on that program, and that was actually, I believe, what we audited for the single audit. In fiscal year 21, we audited both the child nutrition and the COVID funds, the 21.019 program. You'll see the coronavirus relief funds. We are required to assess the risk of the district as far as grants and the single audit goes. We are based on our guidelines that we follow. There are the uniform guidance. The guidelines that everyone follows. There is a general risk assessment that dictates what percentage that we have to test. So the first year, if you haven't had a single audit in the last 2 years, you're guaranteed to do 40% level of your grants. If you're a district that has a single audit every single year and you're not having findings, among other factors, that could drop to 20%. But because it's your first year, these programs had never had a single audit before, you were at the 40% level. So as I said, we audited 2 programs to reach that 40% threshold.
So for the grants outside of food service, there is like compliance monitoring that takes place at the state level. Would that have affected the choice in whatever program you picked if the district had gone through compliance monitoring on any of the programs? Or?
No, it doesn't, because it would not factor what we choose. it would help the program itself, you know, if they're being monitored by the state and so on. But the state's, you're actually a pass-through, a subrecipient of the state. The state gets the federal money, so they have their own audits. They do the same report where they list out all of their grants. And then if they were being audited by the feds would come in and say, are you monitoring your subrecipients? So they have their own, so they're following their guidelines, and then the subrecipient still has to be audited following the compliance guidelines. So it's it's a lot.
There's a lot of monitoring.
Yeah. So, after the schedule of expenditures of federal awards, as I mentioned at the start, there's 2 more opinion letters. One is the government auditing standards, which basically is saying, like I said, it's clean opinion. This standard relates to your financial statements themselves. Do you have the added disclosures for the grants? Do you have all that information that's required when you're doing what's considered a yellow book audit? And then the next opinion is for uniform guidance, which that is the single audit, so that's your opinion on the actual grants that are audited under the single audit. And again, the grants that we tested were in compliance with all the grant requirements, so. Exhibit 21 is a summary schedule of findings and question costs. So you can see there's 2 sections. There's the financial statements themselves, and then there's the federal awards. We did not have any material weaknesses or significant deficiencies to disclose, as well as we didn't identify any non-compliance material to the financial statements. Nor did we find any compliance that was material to the programs that we tested. And again, this is a good summary because it shows you which programs were tested, CFDA 2119, and the Child Nutrition Cluster, as I said. And that very last thing did not qualify as a low-risk auditee, and that's what I talked about with if you hadn't been audited in 2 years and so on. So that is the bulk of it.
Did the additional, the addition of the single audit add significantly to the amount of time that you needed to spend in the district? And I assume you had to do that for all 3 districts?
No, it was only the co-op
Oh, okay.
for fiscal year 21 and fiscal year 22. Hollis did meet that threshold as well, again,
Okay.
because the food service program became so big for
Right,
everyone.
right.
Brookline was close, but they weren't quite there.
Okay.
And I'd say roughly 24, 25 hours of
Mhm.
additional time. There was a separate fee associated with that because it's
Mhm.
not something we anticipated as we set the engagement itself.
Right,
So.
right.
But we were able to do most of it in conjunction with the regular audit, luckily. So.
Mhm. And do we have like a long-term commitment with your firm, or do we just engage you annually?
It's usually a 3-year contract.
3-year contract.
I believe we're in year 2 of our latest, I believe. So.
I have a process question.
Mhm.
You're giving us the result a year later, and as long as news are good news, there are no issues. But what is the mechanism in case there were issues? Even though you haven't completed the audit for the following year, is there a way you can alert the district of trends that are negative that maybe we need to pay attention to and not wait till you give us the results of the audit for us to take action?
Mm-hmm.
How
So
does that work?
Yeah, so I would say what we currently do is I typically have an informal exit conference the last day where I'm there with Kelly, detail where I'm at, what the results have been, and issues at that point too that she needs to be aware of. And then a draft goes to Kelly and everyone, and that includes any draft comments I have. I basically give them the whole report in draft versus just giving you financial statements to review and then springing it.
And
So
that's usually
at
within
that
a
point,
month or 2 after the school year is over.
that would be late probably right around December, January is
Oh,
when
okay,
that happens.
alright.
So, and
If you look at the dates of the letters, this is like March.
Oh, okay.
The final report is
Yeah.
issued, but that comes during our whole annual meeting and, changing offices and things like that. So we kind of wait until this point for us to look at it, but it is available to the district in
So there's
advance
an
of when
ongoing
we see
dialogue,
it.
really.
yeah, and if it was something that the school board or the budget committee wanted, we could come in earlier if there was. Because the district office would know pretty early in the process of the following fiscal year if there were significant issues, and then at that point they could they wanted us to come talk to the board at whatever that point, we'd happily do that too.
And Andy makes it a point to talk to Tim every year to say, hey, how'd things go?
And one thing with a single audit, and your business office may have received this too, but there was another law passed that allows the Department of Revenue to assess a fine if an audit is not submitted on a timely basis, which is 1 year after the year ended being audited. So there's that deadline, but with a single audit, there is actually a 9-month deadline after the year's over. For the federal, because there is a submission to the federal clearinghouse. So on behalf of the district, I submit the report to the federal clearinghouse. Kelly logs in and certifies that, yep, that's the report that I've been given by my auditors and so on. So that has to be done by March 31st, so that if it's not done, that actually is a factor in our risk assessment to say, can we reduce the testing because they're a low risk entity or not? And one of them is, have you timely had an audit in the past 2 years? And so, if it's submitted in May, it's not timely, and therefore would preclude us from being preclude the district from being a low risk. And you do want to be a low risk because it does keep your costs lower on audit. So.
Thank you.
Well, I'm glad to hear that we continued, had actually no anticipation of it being other than what came out. You guys, everyone in the business office has been doing an outstanding job.
They have, yes.
So, kind of this is the bar, this is the expectation that we're, really not having issues and things like that. And I think the advantage of you coming and doing 3 districts is that we know the 3 districts are operating and kind of with the same efficiencies and management. So.
Yeah.
Anyone have any other questions for Mr. Green?
No, just wanted to say,
Go ahead.
much appreciated to both of you.
Our pleasure.
Well, great, thanks you, Tim. We'll see you next year.
Yeah.
I'm sorry.
Before we go,
Sure.
I just want to say congratulations to Kelly. I think it goes under the radar that our financials are incredibly successful when it comes to accuracy and detail, and that year after year, we quietly go through an audit that we don't get a lot of public comment about. We just do it, and if it was wrong,
We'd be
We
here.
hear about it.
it would be somewhat catastrophic.
Yes.
So, congratulations, and thanks for your great work and for your office's great work.
Thank
It's
you.
really impressive, year after year.
Thank you.
Have a nice night.
Great.
You don't get to
Have a good
celebrate
evening.
county very
Yeah,
often.
really.
No, yes.
When does that ever happen? Okay, so, we can move on to the school board update. One of the items in the last package was something that relates to budget planning, so I think we'll get to that. But Cindy, I'll turn it over to you to talk about what's been happening in the summer with the school board. I didn't see an August package
We
at the
haven't had an
time,
August
'cause I
meeting.
realized your August meeting was later than
Yeah.
normal. Usually we follow your meeting, but this month it is
Yeah,
working
next,
out
we're
that way.
meeting next Wednesday. There was a change in the schedule due to some conflicts. I was not at the July meeting. I know Darlene mentioned to you to look at the minutes. The two highlight things that they did was they did talk about the budget, some things of interest to the individuals. Just for a quick highlight of it, the stipends came up, programs of studies, mainly like business classes, some of the things that we used to kind of have that we don't have anymore, and the CTE programs were some of the bigger issues on that. And then the facilities, Tom has mentioned is if you read the minutes, he would like to see the facilities be included in the budget and not taken out of the trust, so that came up again. And then the other thing was the average for an out-of-district student. I think Andy has noticed, or someone in the office has noticed that has increased, and so we're looking into what the average cost is currently.
Yeah, so when Holly was here in June, we talked about that a little bit, just about kind of our tolerance, if you will, for now that we've reached kind of the maximum that we had identified for that special education trust fund. Is it something we would reconsider? And of course, if we're seeing that the number we had talked about probably 5 years ago is, needs to be adjusted, it's something we would of course consider, so.
Right. And I think there's, the stipends, comes across for both the coaching staff and then the club stipends. And, we do discuss the club activity stipends every year now. And I think the athletics is going to probably be part of that process. Andy was going to throw some numbers together, and that'll come back to us in August. There was not a deep discussion on finances specifically.
Yeah, so what was included in the budget package was probably a first cut of a stipend proposal. It was great to see, and we've seen it before, but it's great to kind of see the extracurricular stipend list to see what falls in what tier, because it's a tiered stipend system that breaks out different levels of stipends based on the tier and the time that your advisors or team coaches and things put into supporting various programs. And then on top of that tiered approach, the new stipend, this is what would affect the FY24 budget. The new way to finance those stipends included longevity bonuses across the tiers. So it's a different way of looking at it than our district has looked at in the past. There were some initial estimates of, if we placed our current advisors and coaches on the table, here's, approximately where things would fall out. So, and I am, for the tiered level with the longevity would be for extracurriculars as well, or just for coaching?
No, I think that might be just for coaching.
Oh, just for coaching, okay.
I'm
okay.
not 100% sure on that. It's still a work in progress. So.
Okay, so that's something we'll be looking at as we look in FY24. There'll be, as you said, a proposal that kind of addresses it, but at least seeing that kind of preliminary cut, as I look at it now, I see FY24 coaching stipends and realize that it's athletic based and it isn't addressing the extracurricular side for like clubs and things like that.
that piece wasn't,
Okay.
And I think I did mention before, it just came to my head though, that there is a committee formed at the SAU level to look at some of the comparisons for administrative salaries, so that may come into the budget play. I don't know when that's going to actually be presented, probably October meeting maybe for SAU. So they're wanting to do like a comparison to see where we fall within the state
Yep.
with the information that we can obtain.
Is there still a building, like a committee that's looking at the changes to the facilities, like the committee that, the enrollment and facilities committee, like they were looking at how the change of enrollment would affect like capacity at each building, and we had started with the air handler changes, but it was like an evolution of changes and things we were going to be considering. Is that committee still like
I'm
working
not
on
sure
things, or?
we ever really had a super official committee on that. It was more just a number of administrators
Yep.
looking at those issues. We're still going down that path, yes, but
So the idea would be for that committee to review the output of the tool that we talked about last time?
no, those
this
would
was
be
like
very
a larger
separate.
scale.
Oh, okay.
More like overall like capital expansion of like real renovations and things like
Okay.
that the district might
Right.
need, so, okay.
Revolutionary changes rather than evolutionary changes.
Revolutionary,
Not just the
yes.
basic.
Okay.
The other thing that's not really a financial is I think probably most people know we have a board opening that was created in June, and they did interview 2 candidates, and then the board met and they were going to notify them, so no one's been appointed. It would have been last week, but now it'll probably be this next week.
Okay.
So just real quick, about those stipend issues, are we still having trouble getting coaches? So what's driving all this?
We are. I mean, I think Brian feels like he's confident we have enough for the fall, but I mean, it becomes an issue all over when you're trying to, because you need multiple. I think we're okay at varsity level. I think the other areas is where they kind of suffer.
Right, I think this is coming from the fact that we're not competitive, as competitive as we'd like to be.
I know they were struggling quite a bit last year, and I just didn't know if that was still continuing.
Yes, I believe it is.
A lot of openings.
Anything else?
I don't think so. I think that's That's all that was really,
So the
Pertinent.
opening in the board was as a result of Liz Brown
yes.
resigning her seat. Liz accepted a position at the state level in the DOE, and so there was to avoid the perception of a conflict of interest, Liz resigned her seat. So great, we'll look forward to hearing who the replacement candidate is, and then that person, of course, would have to go through the next election
Right, they would have to be
cycle.
on the ballot
I
for
don't know
next
how many,
election.
I don't know where Liz was in her term.
I think she might have been in year one of,
Oh,
I mean,
okay.
I'm not really sure myself.
Yeah, I just don't recall.
It cycles so differently, but they would definitely have, whoever's appointed would definitely have to go on the ballot in March.
Yeah.
That's just the
Can
general
you just
rule.
give us the board packet also talked about just like changes, and we know that Bob Olet, as the assistant principal at the high school, retired. So we have a third, we have Yolanda Flamino moved up from the middle school up to the high school, and then we have a new assistant principal here at the middle school. But just in general, was today like an opening day for staff, a first day for teachers to
No,
return?
that'll be Monday.
Mondays,
okay.
Monday's the opening.
Are we staffed appropriately?
Yes.
There, there just continue to be staffing issues in general and
Oh,
various,
yes.
but we're kind of where we're ready, we have the major positions filled.
Right,
and-
there are, all the administrative positions are filled. There's a couple, maybe two, maybe three, teacher positions that are last minute,
Right.
we're trying to fill. We continue to have problems filling para positions, and custodial positions are still open as well.
Mhm.
So those are and food service, let me not
Yeah.
forget that. We hopefully will get a few more food service, because that's a pretty critical shortage right now.
Right, and as we move into this year, lunches are no longer free,
That is correct.
so we'll be going back to the model of charging students for lunch. Anyone
Yes.
can, if you qualify for free and reduced, you fill out the paperwork and things like that. But we're back to charging students and.
And to ease that transition, we are starting the year with the same rates that we had before COVID, before we started doing free lunches. So we're hoping that helps transition, and we may have to go up sooner than the school year ends, but, because food is very expensive right now.
There was talk of like modifying like the lines, like the
Yes.
organization of the cafeteria at the high school,
Yep,
correct?
yes, we're still working on that. Our designer every school in the state must be doing something similar, because his time is very precious, so he's not moving as fast as we'd like, but that is still in the works, yes.
Okay.
So, the food's gonna be expensive,
It's very
so
expensive,
there's likely to be a loss, right?
That's, the
Meaning-
potential is there, but we've also heard that, we may get some relief funds for
Okay.
that as well, but there's nothing, guaranteed at this point. But we did have, I think all three districts had an increase in fund balance after last year, so we'll just,
The food service fund
yes,
balance.
yeah.
Just FYI, my company, they're still continuing with the mostly free food service, but as they transition into pay-as-you-go, certain things are gonna remain free no matter what. For example, bottles of water,
Oh, that's
and maybe
nice.
coffee, and a few things like that, So, you might consider, as part of the transition period, not making everything to be pay-as-you-go, but maybe certain things still keep them free.
Well, I think
I mean, I don't know if that makes any sense or not for the
It does,
district.
it makes sense, I understand what you're saying, but we opted to keep the rates lower as
Right.
opposed to targeting certain things because of the cost of things. It's probably not as feasible as we'd like to offer free things.
I mean, for example, water, I mean, that's relatively free,
Well, that's,
cheap, but it creates a certain image and a certain impression, which is
sure,
positive.
and all kids have access to free water, that's not an issue
Right.
at all,
Okay.
yeah.
Kids tend to hoard stuff. Free stuff tends to leave quick.
Thank you.
One of the other things included in the board packet was a letter from NEASC. We haven't, NEASC several years ago garnered a lot of attention, and I'm happy to say we just have made some really positive changes and have kind of put us on a path to, the submissions that are made are, are moving along with the, changes that NEASC is expecting. So it was just nice to see the list of things that the commission was pleased with how the district is progressing, and I assume that will all just kind of continue as we go through those,
far as I
that
know,
kind of
yeah,
process. So
right.
it's nice to see that, because for a while there, there was a little bit,
We should be publicizing
yeah.
all this awards.
Yeah, it was really nice. Actually, it was, we talk about, well, there's a committee to do this and a committee to do that, but when you kind of see it all listed in one place, it makes you say, wow, the district really has accomplished, a
Right.
lot in,
Right.
Even through COVID and all of that. So
Sure.
it is nice to see it all in one place. So any other questions for Cindy about the school board? Do you know any of the topics for the upcoming meeting?
Yeah, we just actually got the
Oh,
packet.
I didn't even check today.
We just got it tonight, I think, practically. I just did a screenshot. Curriculum discussion, program of studies, stipends is back on it, and the renovation facilities update,
Mm-hmm.
because we have the air handlers, they're
Yeah.
almost done if they're not
Oh,
done.
yes,
Yeah,
the big stuff's done.
yeah,
Great, well, then that meeting is next Wednesday,
yes.
so everyone can attend or watch the live stream. Okay, I think the last agenda item that I have was just the FY, oh my God, I put FY '22. I didn't update. I go back
I
and
didn't
use
even
old
notice. Oh my
things.
God.
The FY '24, wow, budget planning, oh my God, I can't believe
This is
I
like the
did
federal government's budget.
Jeez Louise.
You've got to plan 2-3 years ahead.
Holy cow. So we're gonna do FY '24 budget planning.
22'd be easier.
Good Lord, I can't see that. Because that means that last year it was wrong too, because it would have been FY '23.
Yep.
Um,
And neither one of us are looking at that number.
Okay, we are gonna get there. We are gonna get there. So just kind of to review our normal process, we roll into, the district is already working with the administration on preliminary views and views that we don't even see as a budget committee. They work through a lot of issues before things come to us, and we really, work through preliminary guidance and set preliminary guidance in October. And then, we'll continue to see, all of the inputs to the process, like enrollment. While there's preliminary adequacy numbers, we'll get better adequacy aid estimates after the October 1st enrollment numbers are reported. NHRS did come out and set their rates, which, hang on to your hats, they're lower. So I'll send everybody the link to that, right? They are like, yeah.
Yeah, shockingly.
Crazy. And I believe there was also, I think a legislative update is absolutely in order, because there's a piece of legislation that will reimburse districts for a portion of NHRS costs for this current year. So it would be nice if that were to continue into FY '24, but at least there are some positive aspects on that. And I don't think we've ever seen a reduction.
Not since
I
I've been here.
can't even remember the last time that's happened. So, we'll work through all of those planning elements and see if there's any interest in a student services overview. Did we do
No.
one last year?
I don't think so.
I think we did. So if there's interest in that overview again, that's always a good topic. And I don't think we have any contracts. Do we have contracts?
No, not for the
Wow.
co-op.
Wow, no CBAs, lower NHRS rates. Oh my gosh.
Let's take some
Um,
vacation.
But this is not gonna, let's not rest on our laurels. It doesn't mean it's gonna be any,
That's correct.
like, easy process. It kind of goes through the same kind of
Should
scrutiny.
we get
and everything else,
an update on the NHRS system? I mean, what's
Um,
happening at the state level and
I can probably,
maybe a presentation on
there
that?
are some online presentations.
Okay.
I can provide the links to that.
Okay.
The last presentation I saw actually gave a really nice overview of that kind of 30-year mortgage aspect of NHRS and things like that.
Okay.
I mean, years and years ago, we had somebody come in and walk us through. I think they were from LGC, and they now charge to do that. It isn't like a free service
Okay.
anymore. But the presentation that I viewed was really, had a lot of good information in it, so,
Maybe we should do it as homework, send the link, we'll all look at it,
Yeah.
and then we can discuss it at a meeting.
I might even,
I mean, we need to understand the implications of a potential lower rate, like, you know, what other options would there be with the rest of the
well,
budget?
it's not that much lower, let's not get.
Yeah.
Yeah.
This is more of a, like, it definitely didn't go up, it's going down a
Yeah.
little bit, so,
Yeah.
kind of helps offset. It's not like,
Don't get too excited.
don't get too
Okay.
excited. And as Cindy mentioned, there are, you can look at it as an opportunity to really address some of our programs and things
Yeah.
that maybe
Right.
haven't been addressed in a while, so, that's good. There might be, Kelly, did you listen to, there was a DRA overview of adequacy?
Mm-hmm.
I think I'll look and see if I have the link to that. It was a whole overview
That's right.
of
Yep.
the components of adequacy. And we can spend there are actually additional components since that one's been done,
That's
but
right.
that's actually another good overview
Yeah.
of how
That's
adequacy
usually hard to
is
comprehend.
It is, and the spreadsheet's available at the DOE. Oh, that's what I know we wanted to do. The spreadsheet's available on the DOE website, and it's a big one.
Yeah.
There are, for the last few years, they've been calculating everything two ways, then they pick the higher of the two, and which district gets this and so there's a lot that goes into it, but actually, it might be good during the month of September to just talk about some of the DOE reports that are available, because there is a lot of really good information, other than just like the cost per student, and tax rate information and things like that. I mean, if you're going to, as a budget committee, we decide we want to do some type of comparison between other districts and everything, there's a lot of really good information. And there's a platform that the DOE has that you can actually compare certain financial aspects, like side by side with other districts and things like that. So it might be a good time to kind of walk through some of those things, because there's just a lot of good information
Okay.
that's available.
So you're gonna give us a presentation on how you can navigate the DOE
Yeah.
website,
Yeah.
pull the information out, right?
Mhm. Hopefully I can find the things that I'm talking about, because
Just kidding.
sometimes you just sit there and like, where is that? I know it was here, I saw it before. So yeah, we can do something like that. So,
A couple of things.
Mhm.
One is, I think it would be good at some point to do a meeting that's focused on more long-term capital improvements. Thinking in terms of looking at like our overall enrollment changes, and where that's going, and looking at 5 to 10 year look at the facilities and buildings, and where this is going.
And I'm not sure we're ready to do a presentation on that yet, but
No.
we are in discussions on that.
Mhm.
So maybe give us a few months and we can pull that together more than it is at this moment.
Yep, and that doesn't necessarily feed into budget cycles for here, so we could
Okay.
wait until after budget cycle
Oh,
here.
okay, all right.
But at some point, I think, we should be doing that every few years to look at it. The other thing is, for this particular budget cycle, though, I do think we want to, I know you'll probably be doing this, but we should do it as well. Look specifically at the budget items that are going to be impacted by the inflation rates. Certain budget items are heavily impacted by them, others are not. Debt payments are not going to be affected by it, but some things are, and we need to kind of take that into consideration when we set the the targets.
Okay. Anything else?
We have our calendar set.
We will continue to be fourth Thursday of the month, so our next meeting would be the 22nd of September, the 27th of October, and then we run into Thanksgiving and Christmas, where we kind of
Play by ear.
maybe look to the third week of each of those months, which would be November 17th, December 15th, and back on track for January 26th, and probably a public hearing by February 8th or 9th or so. So that kind of gets us through.
When do we get the budget from the school district?
Do we normally see one at the end of September?
There's no way,
It's
because
October.
the schools are entering, we give them till the September 30th to enter the school piece of the
Okay,
budget, yeah.
So October, we
Yeah,
would see a
yeah.
preliminary.
I could never pull that together before October.
Right. That's
In
the
fact,
first
you
week.
guys see your budget before anyone else sees theirs,
We do,
so, yeah.
we do, yeah, we are actually ahead of the other, so we'll see that at the end of October, a preliminary view. But we kind of work through the guidance calculation of where we kind of anticipate being, and kind of back that up then against that first view and kind of see where we are. And
So we, just procedurally, we receive input from the school district about what they anticipate their budget to be, and then we look at that and either validate it or make suggestions.
we issue preliminary guidance based on a formula that, a consistent formula that the Hollis Budget Committee uses and this Budget Committee uses to kind of look at the puts and takes and kind of come up with our estimate of where guidance would, where the budget would fall. I think last year, the first view of the budget actually came in below preliminary guidance. That was another, like,
That's a never
that
happened.
Yeah.
would be so exciting if that happened the second year in a row. But yeah, and so it's kind of based off of that preliminary guidance of how we kind of, assess that versus that first view of the budget. They're kind of happening in tandem.
I think Brian's comment was really good, because I don't think we've had a year like this before where, typically when the tide comes in, all the boats rise. But we're not experiencing that right now in this economy. It might be helpful to look at individual, overall number that says, we expect this percentage rate.
Right.
Some things may go down. Line items might go down because of their cost basis.
So
But then
Kelly,
some may go up.
Yeah. they
On our-
go up significantly.
I mean,
On
more
our-
than
I was stating
usual.
a more extraordinary case.
on our transportation contract, we
Yes.
didn't lock in a rate per gallon, price per gallon per gas, did we?
Well, we buy our own gas,
Oh,
so
okay.
that is separate.
Okay.
But we do actually, was it a 5-year contract or 4? I can't remember.
Oh,
So we do have a locked-in amount.
Yeah.
Wow.
Yeah,
wow.
that was
So
recent.
by
How
gas,
do
you
we
mean
get that as
gasoline, or you mean
individuals?
propane for heating, or?
No, that's,
Well, if we're talking about transportation,
Yeah.
that transportation contract does not have any, a price in there for gas.
Okay, so.
We buy that separately because we can get a better price than the bus company. And,
And that's what's contracted.
yeah, the contracted with the bus company, separate from fuel.
No, I mean, the
Oh.
fuel cost you said is contracted?
No, the fuel
No,
cost
just
is
the
not.
transportation
Yep.
contract.
Just the transportation, the bus, the
The
actual,
bus
Yeah.
piece.
getting the buses to our door.
Okay,
Right, so the fuel is what it is,
Yeah.
yes.
okay.
And then as far as heating fuel goes, every July, we send that out to bid. And the bid we came back is very expensive, so that's one of those inflationary moments, as well as electricity.
Yeah,
Everybody
I was
else's
gonna say,
electric
electricity.
bills are going up, so are ours. And we even have a contract with a third party for getting lower rates, but no one's getting lower rates, you know. That may affect us in a positive way for a certain extent, to a certain extent, but certainly not.
So we weren't contracted for any of our electrical rates? We weren't,
Well, we do, we have.
but is it just like an annual contract or a multi-year?
It's a multi-year, for the electricity, it's multi-year. I want to say it's the second of 3 years, but there's only a portion of your electric bill that you can actually do that with. There's
Right.
another portion that is
Yeah.
just like you and I, you know? So those things are going to cause our costs to go up in this year quite dramatically, just so you know.
What is the heating
electric
fuel?
alone.
Oil or propane?
It's oil in the co-op. Hollis now has propane, and Brookline is oil as well. But as we look to, you know, make improvements, we'll probably move to propane.
What about the SAU?
The SAU has an ancient oil tank that I was just told today has
Wood
to be
stove.
replaced, so.
Fantastic. Kelly, one thing we didn't mention was the retained fund balance. I know that it's at below the statutory limit, but I'm gonna assume your recommendation to the board is to maximize that.
It is, they just got that in
Okay.
their board
In the
packet,
August
and
packet.
that's to go as high as we can go, yes.
Yeah.
Based on the co-op's restrictions, not the state, as you
Right.
said.
Right. This would be a nice year to have a higher retained fund, have a higher
It could
retained
be.
fund balance
Right.
percentage
And-
for
and-
things exactly like what you just said.
Exactly, we could dip into that this year, who knows? The special ed costs seem to be pretty stable this year at this point, so that is not gonna drive us over the edge in the co-op. It might in the other districts, but not here
Okay.
at this moment.
Okay, so it looks like we can kind of spend September just kind of on some of these kind of background items and making sure we, you know, are up to speed before we kind of hit into everything in October and kind of get the budget process underway.
But we will need to, I mean, before the budget process, we'll want to review the capital improvements plan for the short term. I don't know how often that gets updated.
Well, we just
But-
did go through that,
Yep.
was it in June?
Yeah.
Yes,
Yeah.
yeah, that's right. That does sound familiar. All right, too many committee
Too many
meetings.
meetings, right,
Too many
yeah,
committee
right.
meetings, yes.
Yes.
Yeah, that's bringing back
We do need to do
memories
that in
now.
Brookline, though.
Yeah.
See, that's what happens when we have like 2 months off. Forget where we left off. Okay, well, if there are no other questions or issues, you know, please feel free to send me any as we go kind of move into September. And I'll look to our process observer.
Phenomenal job. It's great.
It was great.
Did it in an hour tonight.
Well, it's even all the information from the
Yeah.
process.
It's a lot.
Yeah, we really do appreciate Tim's time coming
Oh,
and kind of
yes.
going through it. I know it seems like, I mean, it's great to hear every year that we kind of are in kind of the position that we're in. It's great reinforcement, and it's just good to, you know, especially as we had to add the single audit for
Oh,
the
yes,
the federal
right.
funds and
Yeah,
things like that. That it
we
was good
never
to-
had 2 single audits, so that was
Right.
kind of a shocker, but, you know, it's all that COVID money.
Yeah,
Not that we got that much
not
of
that we
it, by
got
the
that
way.
much, but.
Enough to go over the threshold.
Yes, just enough, yeah.
So, with that, I'll look for a motion to adjourn at 7:35 PM from
So moved.
Brian, seconded by
Second.
Cindy. All those in favor?
Aye,
Aye.
It's unanimous, 7-0. Thank you, see everybody in September.
yep.
Thank you, darling.
Thank you.